Right, let's go on to Daniel from Black Rhino, Managing Director of Black Rhino. I know they work in Ethiopia, which is a country that I think is one of the most underestimated markets. So please give it to us, Daniel. Thanks.
Thank you, Paul. Thank you, ladies and gentlemen. I'm from Black Rhino Group. We are an energy development company. We're primarily interested in the power generation, pipeline, and fuel storage space here in Africa. And we're not Pan-African. We're relatively focused in our jurisdictions. We're in Mozambique, South Africa, Nigeria, Senegal, and Ethiopia and Djibouti. And it's Ethiopia and Djibouti that I'd like to talk about today, where we have a significant pipeline project under development. So it's called the Horn of Africa Pipeline Project, and it's about 2 years in development. And the idea of this project is to bring refined products from the port of Djibouti into central Ethiopia. Right now, the fuel situation in Ethiopia, the fuel logistics situation in Ethiopia is quite constrained. It's all trucked from the port of Djibouti, or in certain cases from Port Sudan in the north. And we're talking journeys of between 800 and 1,000 kilometers in total to move some of this fuel from the coast to Addis. Addis Ababa is the main demand center for fuel. And we have been working primarily with the Ethiopian government, because they will be the off-taker of the transportation service provided by this pipeline, and also with the government of Djibouti on the importation structures necessary for the pipeline. Let me describe the infrastructure we're going to build. It's a single buoy mooring system, which is an offshore unloading buoy system that allows fuel to come out of ships, and it's brought on shore into a tank farm. And then from the tank farm, it's put in a pipeline approximately 550 kilometers into central Ethiopia. So that entire infrastructure system is approximately $1.5 billion. And that's one of the largest projects in East Africa at the moment. And that in and of itself makes it a challenge. But what we're doing, and what Ethiopia certainly recognizes today, is that we're trying to replace what is an antiquated system. They have 400 trucks each day on the road from the port to Addis and places around Addis where they need fuel, and 400 other trucks are going back to that port. And as you can imagine, the road system is not equipped to handle that. There are fuel lines in Addis, and I don't know if you saw any, Paul, but every time I'm in Addis, there are fuel lines. For the most part, they have trouble moving the fuel from the coast to to where it's needed in Ethiopia. And so, a pipeline is the most efficient, the most secure, the most, I'll say, environmentally friendly, among other things, ways to move that fuel. And Ethiopia certainly recognizes this, and like I say, we've been working with them for the last couple of years to craft this project around their needs and their demand requirements, not just for now, but for the next 10 or 15 years. And that's important because, as you may know, Ethiopia is the second largest country by population in Africa. Its economy is growing quite quickly. Their demand for refined products has been growing significantly, even since we started with them on this project, which, like I said, 2 years ago, we did our own demand studies with the help of some folks like McKinsey and others. And we thought that at that time, back in late 2014, that Ethiopia would hit a bottleneck in its fuel transportation or fuel logistics systems by the end of 2018. Well, here we are in the middle of 2016, and they hit that bottleneck already. And so, they need a better solution, a different solution, and hence this pipeline. In part, I'm glad, Paul, you mentioned unsolicited bids and getting people together to put projects together and make them happen. And this project came out of our dealings with Ethiopia on another project, which was a project in South Sudan that unfortunately couldn't move forward because of the political situation in South Sudan. But that led to us having discussions with the Ethiopians and then getting together with some environmental and technical and logistics providers and security experts, et cetera, to start talking about a project and figuring out how we could make that work for Ethiopia. And while we didn't get them all to work at risk, we managed to get some of them to work at risk, and that has been certainly helpful to date. Tom mentioned the DBSA. The DBSA is our partner in this project as well. We do have a project prep facility with DBSA. I'm going to have to ask them about a grant because we didn't get that. We have to pay it back. But they've been very helpful and very supportive of this project. To give you an idea of where we are today, we have MOUs with both governments that outline the project I've just spoken about, and we are in the drafting stages of implementation agreements with both Djibouti and Ethiopia to better solidify the project, not only the technical side of the project, but the commercial side as well, as you might imagine. And we've done higher level red flag environmental analysis. We've done some stakeholder identification. We've done an initial route alignment. We've done a security survey. We have a technical solution. We spent quite a bit of time on understanding what the technical solution for this sort of project would be. We've done some costing work. We've worked with logistics firms to understand, when you have a linear project like this that is through some partial difficult territory near the Rift Valley, and you have to move quite a bit of equipment and manpower around in a somewhat hostile environment. We've needed to understand that better, and we've done that. We are, I'd say we hope to complete negotiations on implementation agreements by the third quarter of this year, and then go into project financing mode. And we would hope to project finance sometime in the middle of 2017. Just a couple of thoughts on some of the issues we face in this project, and they're by no means, it's no means an exhaustive list. But it's a multi-jurisdictional project. So we've got assets in Djibouti, we've got assets in Ethiopia, and those governments are quite friendly with each other, which is a good thing, but they each have their own agenda, and essentially Ethiopia is the one paying for this project because they're paying for the transportation services. So there's always some tension there between the two implementation agreements and the two countries. So it's dealing with both of those sovereigns at the same time and working through some of the issues that come up there and trying to resolve those problems as quickly as we can. There are some other issues with respect to currency availability. We will have to borrow in US dollars to build this project, and Ethiopia will need to pay a tariff in US dollars. Ethiopia has some foreign exchange issues right now, and their economy needs to grow and produce additional foreign exchange. Now we feel comfortable about their position at the moment, but it's going to be convincing banks that it's a reasonable position for them to take. And we think in the long run, this actually saves Ethiopia hundreds of millions of dollars on the transportation costs that they now pay in terms of fuel for those trucks that move their refined products from the ship to the inland ports that they have. The wear and tear on their roads, the spare parts for their trucks, those are all dollar costs for them for the most part. And this pipeline replaces quite a bit of that long-haul trucking solution. Credit support, which goes hand in hand with the currency availability. How do you get the right credit support for a project of this nature from Ethiopia? And Ethiopia's had a couple of successful bond offerings. Their economy is growing. That's a good sign for us. They will earn more foreign exchange, but we're working with some of the DFIs to provide proper credit support, a solution that will work for financing. And And then finally, I'd say it's because of the size of this project, the nature of this project, it is just making sure we're on the ground there quite a bit. Black Rhino Group is based in Johannesburg. We have a small office in Addis, and we have a couple people in Djibouti who work for us, but it's on us, I'd say, here to be there in front of the Ethiopians and the Djiboutians, to know the ministers and to know, there was a recent election in Djibouti. The cabinet's just being reformed. Who's going to be where? How do you deal with those people? How do you make new relationships? It requires, a lot of time and attention, and that's our philosophy, to be on the ground here.
Thank you. Thank you very much, Daniel. That was very comprehensive, and I think Djibouti is another place that's underestimated because it's servicing basically a market of 95 million people. It's also where just as an aside, it's also where all the submarine cables are converging. So there's a big data center being built there, and so on. So just a question quickly, sorry, is your line going to Awasa, or where's it going?
Awash, yes.
Yeah, Awash.
Yeah, there's a strategic petroleum reserve there.
It's going to grow that place because that's where Corbeti is and all of that.
Yeah, absolutely.
Yeah.
Doing business in Africa, you can't afford to be without Africa Investor.